Want to be sure you are getting the most out of your retirement? For all the years of your retirement? That's the primary goal of More Living with Jim Brogan and our Dollars and Cents segment, where we provide you with an important financial tip that will help positively impact the quality of your life in retirement. And now, here's Jim with this week's Dollars and Cents tip.
Understanding time horizon and the impact of short-term events. That's our topic for Dollars and Cents today. When we really look at what matters, what impacts markets in the short term? I got a list here of things I'm looking at. Tariffs, certainly interest rates, big issue right now. Inflation, the U.S. dollar, as it's anticipated, the dollar will decline some. What does consumer sentiment look like? And how does that drive markets in the short term? There are a million other bricks in what we would call the wall of worry when we look at short term and what impacts markets. Now, what really impacts markets in the long term? Corporate earnings. What are companies making? What are they expected to make in the future? What are their growth in earnings? That's ultimately what impacts things in the long term. But in the short term, we got all these other things that can happen that can impact markets. You know, I'm going back to every bear market we've had since 1950. And the average length of the bear market, now remember, a bear market means the stock market goes down more than 20%. How long does it take to go from the peak to the trough, the high to the low, and then come back to where it was? The average since 1950 is 14 years. The longest was not 14 years, 14 months. The longest was 48 months. So typically we have to be prepared. That's lost investment time where we're not beating inflation. We're not doing anything. And if it seems to you that that type of recovery that might take 2 or even 3 years, if that seems like an eternity, then your time horizon for your equity investment is probably too short for owning equities. And that's where it's so important to understand time horizon. When we own equities, stocks, the stock market has historically been the best way to fight inflation over time. But we have tremendous uncertainty in the short term because of short-term trends, news events, all kinds of things. And so we just can't depend on the stock market in the short term. So we have to understand time horizon. If we're living on all of our investments in retirement, as an example, what do we do when we see a market downturn of 20 or 25 or 30%? What are you doing right now with a market correction? If you need income, or you're having to sell off investments. And so it's important to understand that your equity-based investment that is in the stock market, you've got to be a long-term investor, because in the short term, we just have no idea. And that means you need to have some safe money that's protected from stock market risk, to be able to depend on in the short term. I can't tell you how important that is. And when you do that and you build that into your financial plan, then all of a sudden the short-term news that drives markets, as I just went through, it does not impact us nearly as much.
That's our Dollars and Cents segment for this week. You can find this week's Dollars and Cents segment and others by visiting BroganFinancial.com.